This recording is focused on the CAP2 Financial Reporting Interim Assessment Question 3 from January 2017. It's focused particularly on bank reconciliations. So you've seen over the last couple of years of exams, particularly in the question 3, the shorter question, the examiner has focused on a lot of CAP1 material, suspense accounts, control accounts, bad debts, and also bank reconciliation. So you need to know your basic CAP1 and your basic debits and credits as well for your CAP2 interim assessment. So in part A, you're asked to prepare journal entries for note 1 on the basis that neither of them had been accounted for, and then prepare bank reconciliation at the end of the year. Now the first thing to note is you will be given a solution workbook with already pre-populated or laid out format. So for example, for question 3, if we just go look at the workbook of how it's laid out, they give you a template like this for the journal entries, so you just have to fill in debit or credit and the account. And then for the bank reconciliation, they give you lined pages, so like a foolscap page, and then they give you space for workings as well. And that will be the case for all the questions, is you'll already have it either lined, blank for workings, or you'll have T accounts already set out if you're asked to do up a ledger account. So just make sure you practice, go back and have a look at the past formats so that doesn't surprise you on the day. So here we're asked, have a look through the question. I assume you've read through it already, and we'll go through part A. So part A here is asking us, give us the journal entries to make the relevant adjustments for note 1 above. So we're told the bank balance for our own records are 3783, but the balance for the bank statement is 31875. So we're saying that they're not the same, so we have to reconcile them, and we'll deal with that in part B. First, we were told when we got the bank statement out, 2 transactions were noted that weren't in our accounts. A credit transfer from our credit customer. That means trade receivables paying us, which would be debit bank and credit trade receivables. So that's all they're looking for there, 2476, 2476. So that is essentially your credit customers, your trade receivables paying you. So you increase your bank, you credit your trade receivables. And a phone direct debit taken by the supplier. So you didn't have this in expense already. So you'll debit expenses and you will credit your bank. So by the bank here, we're looking at the bank account, which is the 3783. So we're updating that figure. 641 and 641. And that is your 4 marks for part A. So these CAP1 questions can be nice if you have practiced your basic double entry, not just your international standards and your group accounting. So what you're looking for here, going down then, is we have then prepare bank reconciliation. So remember what a bank rec is, you're trying to reconcile between 2 figures. The figure in your accounts, which is 3783, and the figure in the bank statement. And there's 3 sources of differences. The first source is errors or omissions by you, and they will require adjustments, such as the 2 up here. Any errors or omissions by you, you have to update for. You then could have errors or omissions by the bank. And again, you won't update that you won't adjust your accounts for that because nothing is wrong with yours, but you will use that for the reconciliation. And then you have just timing differences. So certain items like checks and lodgements, they may be in your accounts, but they may not have hit the bank statement yet. So there's nothing wrong with that, that's just how it happens. But they're not adjusting, but they are reconciling items. So how you typically start off is, step 1 will always be adjust your bank account. So you adjust your bank account as per your accounts. So we'll just open up a rough T account here, just so we can see what's what. So we call this bank, and we'll have an opening balance on the debit side of 3783. Your balance brought down 3783. So we're trying to go through each of these then and figure out, well, which exactly means I have an error. So if I left out something, or do I have an error that needs to be adjusted? And the first 2 we know, they are omissions by us. So the first one is trade receivables paid us. They paid us 2476. So actually that money should have been coming into the account. Therefore, you put it in the debit side. That's one adjustment. And then the phone direct debit was taken out. We'll call that phone bill, and we'll take out 641, which is a credit. So we're really just putting in those two adjustments that we did up front into the bank account. We're then told a check is mailed to a credit supplier for 1594 has not been cashed. So think about that. You wrote the check, so you credited your bank account already, but it hasn't come out of the bank statement yet. So it's not out of this figure here. That is just a timing difference. So it's correctly taken out of your bank account, so it's already taken out of that 3783. So you don't double count it. Similar logic here, cash sales lodgement was lodged at the year end, so it was put into the debit here, because when you lodge it, you debit your bank straight away, but it didn't hit your bank statement because obviously the New Year's holiday. So that means this 1458 is not in here. It is in the 3783, but it's not in here. And again, that's a timing difference, so that'll help you reconcile between the two. The bank made an error, which is the type 2 here, by deducting an amount of 780 from wages twice. Now we know that means there's an error in this figure, but this figure is fine. There's nothing wrong with this figure in terms of wages, it's just been doubly taken off here. So we have to, that'll be a reconciling item that the bank will have to adjust for as well. And finally then you're told Linsony issued a check which had been cashed for rates of 564, but it had written it into its records as 465. So essentially it had understated the check for 99 euro. So you're going to put here an extra check, the check error. You should have credited 564, you only credited 465. So that means you have another check error that 3783 should actually be 99 lower. So that's an error by you. So then you balance them up, and this will be your updated balance. Both of them have to be 33,259. So the balancing figure, your updated bank account figure, is 32,519. And that's your starting point for your reconciliation, or one of them at least. So step 1 is adjust your bank account and say, after all the errors and omissions that I found here, I'm saying my updated bank account should be 32,519. But that still doesn't match 31,875. So that's where you come to your step 2, which is reconcile updated bank figure to bank statement. So you always have to update your bank figure first and then worry about the bank statement. So your balance per statement we know is 31,875. However, we also know the updated accounts, or we say updated bank account, which is often known as your ledger account, that is 32,519. So what the reconciliation, which is the second part of it for this 11 marks, is explain the difference between these two. In bank reconciliation questions, they should reconcile if you've done it correctly. That's the nice thing about them. But you have to figure out then is, the things that reconcile or help reconcile these are type 2 and type 3 here. Any errors or omissions by the bank and any timing differences. Any errors or omissions by you should already be adjusted in here because you've left it out of your accounts, so therefore you have to adjust. So therefore we're left with 3 items. An outstanding check, an outstanding lodgement, and we have a bank error. And those 3 items, and it's important to practice now understanding what is it a positive or a negative. So take for example the outstanding check, which is note 2. So remember, this has been sent to a supplier, but it hasn't been cashed. So when we send it to a supplier, we would debit trade receive or trade payables and credit bank. So this check is already taken out of here. So it's already out of our bank account, but it's not out of here. So that means this is overstated by 1594 compared to here. So to reconcile between the two, you minus 1594. Because it's not out of here, but it is out of here. That's just a timing difference. Similar logic, although in the reverse for a lodgement. In the lodgement which you made on the 31st December, so in your books, i.e. in your bank T account, you would have debited bank 1458. So the 1458 is in here, but it's not in here because it didn't get lodged in the statement until the 1st of January, and you have the bank statement at the year end. So there's a timing difference there. So that's going to be plus 1458 because it's in the bank account, but it's not in here. And when you're reconciling this way, you have to be careful to add it on. So just make sure which one you start with will dictate whether it's a positive or negative. If you start with a bank account, you'll have to switch signs. Just make sure you understand the logic and try not to learn off positive or negative. And finally then you're told the bank made an error by deducting 780 twice instead of once. So that means in your bank account it's fine, but in your bank statement it's 780 less than it should be. So this will obviously be 780 bigger because they double counted the wages. So to reconcile between the two, you add on 780. Because this plus the 780 that it was incorrectly expensed will get back to here. And when we sum the balance for the statement plus the adjusting items, we thankfully, as you can see here, get to 32,519. And we're nowhere correct. So that's always the sense check for these trade, or for these, put it in this color, bank reconciliations is you know whether you're right or wrong, because it has to come back to match your updated figure. So we're saying this is our correct figure that should be in our T account at the end of the year, accounting for any errors we made. This is the balance per the bank statement, but we can explain where the differences are due to a bank error, which we have to follow up on, and to two timing differences, which will unwind itself very quickly after the year end. So once that check is cashed, and once that lodgement comes in, and once the error is rectified, both of them will be at 32519. And you just want to make sure you have it correct at a point in time, which is the year end. So that question, it was a short one, 15 marks, so 15% of your time. So remember, if you go back to the overall paper, you have 90 minutes. So 90 minutes at 15%. You have roughly 13 or 14 minutes there. So 90 times 0.15, in and around 13 or 14. So it's not a long amount of time, but they usually are shorter questions because you'll have longer questions in question 1, question 2. But again, highlight the importance of knowing your basic CAP1. Bank reconciliations, control accounts, bad debts are all regularly examined at this interim assessment.